Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, April 25th. As always, we are going to review the economic data, house price index, new home sales, and consumer confidence. And also, we are going to review some of the most important earnings for today: McDonald's, General Motors, UPS, Pepsi, along with some interesting technical analysis on the Nasdaq and on other markets like gold, copper, and dollar. Those are really interesting today that we are seeing continuation to the downside. But first, economic data. Building permits month over month in the negative. Quite heavy hit for building permits. That means that demand for new houses and new buildings are decreasing. Case-Shiller home price index in the positive, both month over month and year over year. We were expecting flat and negative, and house price index, unfortunately, is still in the positive. So house prices are still going up year over year, higher than expected, but at least cooling down from the 5.3% on the previous year, on the previous reading. And month over month, we were expecting negative, and we are still seeing inflation. New home sales, despite those prices, are, look at this, 9.6% instead of the 1.1%. So new home sales are really hot, and consumer confidence decreasing 104. Remember that 100% reading is neutral. We are still confident despite the fact that we are seeing a decrease from 104. Richmond Fed services, manufacturing, and shipment all in the negative, and services revenue for Dallas Fed, well, positive and negative, but all these are still showing the same as we did for this week. Real quick, for manufacturing index, Dallas Fed minus 23. So today we got these services revenue and Richmond Fed manufacturing also in the negative, still showing signs of cooling down. So that's really interesting. So today's economic data is not really important, but house prices going up and new home sales going up, despite the fact that consumer confidence is decreasing, but still in positive territory, means that the economy is strong and demand, at least for the home sector, is still there. Now let's focus on the earnings. I'm always focusing on consumer discretionary in this channel due to demand destruction that Fed is really wanting to see. Today, UPS is interesting, General Motors for the auto sector, but McDonald's and Pepsico are really interesting. Why? Because McDonald's beat estimates despite price hikes. Do you remember in yesterday's video, Coca-Cola also beat top and bottom estimates despite price hiking. So McDonald's is doing also the same. With really interesting 2.63 versus 2.33, so really crashing EPS and revenue. Look at this, almost 6 billion versus 5.59. We perform well in good times and in bad times, the CEO Chris Hemsworth said in a conference call. So, well, looks like people are still going to fast food and they are at least a really stable in their budget. Pepsico is also doing really good, beats also expectations, 1.5 versus 1.33 on the EPS, and look at this, 17.85 versus 17.22. PepsiCo also consumer discretionary, same as Coca-Cola, beating and also raising outlook. So this is really interesting. So demand is still there in these stocks. General Motors also showing signs of really the auto sector going really good. Raises guidance for this year due to first quarter Q1 earnings beat both expectations, 2.21. Look at this, 2.21 versus 1.73 on the EPS, and almost 1 billion more of revenue. This is really huge for General Motors. And last, I would like to focus on today we got, not today, but yesterday we got First Republic Bank after the close, And I would like to talk, now that we reviewed earnings on the consumer, discretionary and staples. Look at this. First Republic says that deposits tumbled 40% to 104 billion in Q1, but have stabilized since. Okay, at least they are stabilized. But 40%, I mean, this is really huge. And the earnings were not really good. Deposit activity began to stabilize beginning the week of March 27, after a week after the big issues, and has remained stable until a couple of days ago. Total deposits 102 billions. I mean, this is really bad. And I mean, this is still showing concerns, because if we check how it performed today, sorry, it's not that one, it's, let me check, is this one. This is FRC. So we got earnings yesterday. It got crashed. After hours was 23% in the red. And now we are 28% in the red. We check the daily. This is after all these things. I mean, since the gap down, we are, take a look at this, 90% down. 90% down. I mean, let it sink. Imagine that your savings are gone 90%. This is unbelievable. And I would like to highlight this, because there's no way they are going to be able to survive this. There's no way. And most probably these are the next ones going down. And if we check the rest of the market for the financials, XLF due to this is 0.66, but look at this. Charles Schwab 2.56 in the red, M&T Bank 167 in the red, Bank of America 1.58, Morgan Stanley minus 1.55, TSM, well, this is not this, but overall regional bank sector minus 1.92. So this is one of the reasons why we are so bearish. This is one of the fundamental reasons. Another reasons are that other markets like copper, now we are starting to show charts, entering technical analysis. Look at this. Copper rejected with this. Let me draw some interesting lines for you. So I was waiting. Copper is called Dr. Copper for a reason. It's a really big gauge of how it performs on the economy. And we were expecting this breakout. 1, 2, 3 candles and this breakout, but it failed. It failed really big. Failed. And after that, we consolidating. I was still watching that, but look at this, 1, 2, 3, and a big day today. Why? Everything is converging. Not only the banks that are also now in focus due to FRC and concerns on their health, but also copper is showing really signs that economy it's most probably already in a recession, and we are going to see we are going to see really big issues in the midterm. This, let's wait for today's close, but this is really big. Copper is showing that the economy it's not healthy, it's sick, something is happening. Gold it's also feeling the pressure, but we have to still, the macro trend is still up, even though we rejected with this big red candle. But if we check the 5-minute or even the 30-minute chart, we can see that we are seeing big red rejections. One rejection, another rejection, and today another rejection. We are still holding more or less around 2000, right now 2000 flat, but copper first pulling back, gold seeing weakness, crude oil seeing weakness, demand destruction. It's still trying to fill this gap that I have in this white rectangle. White rectangle is that weekend gap after OPEC Plus released news that they were going to cut production. But look at this, they are still buying, but I mean, this is showing demand destruction. Crude oil not going up is just as a big punch in the face. And also dollar is showing the strength that gold and copper are lacking. Look at this beautiful trend. And in the 30-minute chart, if we check this golden pocket on the fib retracement, look at this. We almost nailed the retracement, and since then we are going hyperbolic. So let's think about this. Earnings today, Microsoft and Google are reporting earnings today. So let's think about this. Microsoft, Alphabet, and I'm also watching Visa due to credit crunch that I'm expecting to see. So Microsoft, Alphabet, and Visa are everyone is watching for them, is waiting for them. But that's still unknown. What we know, though, is that copper is showing signs. It was already showing signs of weakness, gold weakness, and crude oil weakness. All these three shows that there's something sick in the economy. And also dollar, the amount of flow that is putting into dollar, into cash, look at this strength. This is clearly showing you that you cannot be a bull right now. You have to be really careful, really cautious today until at least we see the big tech today reporting earnings. I don't know if they are going to be good or bad, but what is true is that other markets are already telling you that you have to really be careful. This green daily support that we have, it's right below 13,000. We held in here since then. Previous resistance is now support, and now we are at that zone. Along with that, if we check the open, we started going really choppy. These 1-minute candles were like, okay, I'm not doing anything. We were supporting this last week low. That's last week low, 12,982. It's this level. But as I was saying in my previous videos, in my previous YouTube shorts, we are pulling lower highs everywhere. And in that context, you have other markets that are seeing really big weakness, and you have this really nice channel. So after this rejection here, I was just short, I don't know where, but I think it was just below last week low, around here. And I took all these one, or I think it was 2 contracts around here. The second contract was not a good one. It was in the profit, but I took this move. Look at this rejection. Look at this channel to the downside. The next thing that I was watching is this break and this confirmation of the trend line, the downward trend line. So this breakout, I was really hoping maybe we are going to pull with the point of control with volume down here. Are we going to pull a reversal? Well, I was watching that. I was not thinking about going long anywhere because my bias of the day was short. And let me tell you, I really recommend you not flip-flopping. If you start the day and if you are looking with some technical setups and bias, you are short or long, I really recommend you not changing that, because then you are in trouble. You think that every pullback is a reversal and you start spiraling down. I mean, I really advise against that. So telling that, this was really a nice confirmation of weakness. And I think this last week, you can just short last week low, this blue dot line, and just send it and cover at the close. This was really weak. Today we are minus 1.14 on the Nasdaq, and there's rejections everywhere. So Apple is not super red, but it's still doing. It's not nice trend, but look at these accumulations: accumulation, push, accumulation, fail, push. Microsoft is the one that is seeing most weakness. I was also watching this break, but it failed. And Microsoft is one of the big ones that is reporting today. The other one, by the way, Microsoft is minus 1.40. Google, the other one, is minus 0.24, not deep in the red, but still showing signs of it wants to go higher. But the next one, Nvidia, minus 2.33, Meta, that is also reporting this week, minus 1.57. The only one that is doing something interesting to the long side is Tesla. And even that, 0.20 in the green. And it's just rejecting this gap. It doesn't want to enter, because if it enters, there's almost 10% of potential to fill this gap. And this gap, I'm not the only one watching this. You should be watching this. And I can assure you that the big Tesla investors are watching these gaps, and most probably to buy the hell out of Tesla at these levels. 150, 147, 146, those levels. I'm watching that. But it doesn't want to enter this gap. So once it rejected, I was really cautious on going against the Nasdaq, going against short, because Tesla can really affect the market. Not because the market cap, but oh, look at this. And the point of control is up there. So be careful, because there's potential to the downside. I think Tesla manages and changes a lot of the retail sentiment. But as long as Apple, that's the biggest market cap out there, and Microsoft reporting earnings today continue showing signs of weakness, with also copper, with also crude oil. Crude oil is going higher, I don't know why. With also gold showing weakness, dollar pushing higher, 0.60. I mean, yields are being destroyed. So a lot of people, the bonds market, are already telling again, economy is sick, we have issues, we need support. But what will the Fed do? This is December interest rates. Futures, 4.54 minus 2%. This is telling you again that bonds market are again betting against the Fed, and now heavier. They are telling you we are still at 81% probability for 25 basis points. We are going to reach 5%. But look at this. They are again pushing the message of Fed, you are not going to hold for longer. We need you to start cutting in September. I don't agree with that. I still think May, the month number 5, Fed usually holds before pivoting and start cutting rates, usually holds 6 months, and 5 plus 6 is 11. And I think maybe we can see some cut in November or December. There's no way we are going to cut 50 basis points on September. I don't think that's going to happen. But well, to each their own. I don't agree with what bonds market are showing. Look at this. This is the Nasdaq daily. Big push to the downside. Really, really big push to the downside. And this is because Apple's continue selling off. So this is the market we are in. I really recommend you to go through my videos, specifically the last 2 or 3 YouTube shorts. And since I started trying to warn everyone, there's a market structure change in the SPX, in the Nasdaq, in the ES futures. I mean, I've seen this coming, and I'm not the only one. But the media, and there are a lot of people that are always, due to these V reversals, are vicious to go long always. And at some point, I mean, look at this. Let me hide everything. Look at this. This zone of here, lower highs, lower lows, this is not a flag. We were at a point in which we already rejected so many times that bears were expecting and were accumulating for this kind of move. I was expecting yesterday this kind of thing. I couldn't do this kind of thing yesterdays, and finally the market pushed up. But today, I mean, today is really big. And FRC minus 29, other markets converging, showing you that the economy is really struggling. I mean, don't be naive, be smart. Read the technicals, read the fundamentals, and take those opportunities. These are really, really not that difficult. You just have to take your own analysis to the next level by watching some videos like this channel, by watching other videos and studying the markets. Not only the market you are trading, but also some other markets. Learn the fundamentals, learn the technicals, learn your economy. I'm not a US citizen, and I still know what the economy does and what kind of economy I'm expecting. So I can trade those markets based on that analysis. So that's the real end in which you really know, okay, I'm really trading right now. So don't follow the media, don't follow the AI hype. I mean, take your own analysis, do your own analysis, do your own technicals, take some advice and some recommendations for some other experienced traders like this channel or other channels, and learn. But at the end of the day, you are the one that is trading this, and you are the one that needs to perform all the effort to trade these markets. But I'm really telling you, today was really a matter of patience to really smash the markets. Every other market was telling you that weakness was ahead. So if you were short, if you're a bear, congratulations. And I hope we could find a really trend down for a correction, and then we can start thinking about the big money, the big funds, start looking for accumulations to the downside once we see some fundamentals happening. But at these levels, at this point, I think this is distribution, and we are going to see some kind of pullback until to the 200 moving average that is down here to the golden pocket. I don't really know, but at some point this was a matter of time, and the same is going to happen to the long side. I will be looking for longs once we cross the 200 moving average. This is the EMA, not the SMA. But let me just focus on the ES because the ES is more clear. I think this 200 is, these 3 days were really big, and I expect markets to pull back, or maybe, I mean, they would pull back like this. But at some point, I expect some accumulation around the 200 or these zones of 4,000 and 40, 405, 404, these kind of levels. But this is coming in weeks from now. So for today, I already said a lot of things. I hope you learned, and I hope you like this kind of videos, because I really like days like today, and I would like to share my understanding and my experience with you, for you to take these kind of trades and for you to be able to trade this kind of market. So that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel. I always try to push a lot of content for you guys. Thank you for subscribing. Thank you for your support. And I hope you are with me for a long time and we can trade these really interesting and really difficult markets. But always remember that these days are not done. It's just, we are just finishing lunch hour and into the power hour. Anything can happen. You already know that, right? So discipline, patience, and risk management are key for success. That's my slogan for a reason. Trust me. Stay safe, everyone, and see you tomorrow.